Good morning, everybody. Today we are going to study fixed capital and fluctuating capital of partners. Then, first we studied what is the meaning of fixed capital. Fixed capital. Under this method, under fixed capital method, the partners not made any alteration in the capital. Not made any alteration in the capital is called fixed capital method. Fixed capital method of maintaining the account means the partners not made any alteration in the capital. So here in the fixed capital method, the partners prepare two accounts. They maintain two accounts. Number one, capital account. Number two, current account. In the capital account, only capital amount, initial capital, additional capital, are recorded. In the capital account, initial capital, additional capital, and any capital permanently withdrawn. If the partners permanently withdrawn, normal drawings are not recorded in the capital account. Any permanently withdrew, any permanent withdrawals of capital, permanent withdrawal of capital is recorded in the capital account. In all other information, all other adjustments are recorded in the current account. What are the other information? Any profit earned or any loss suffered, interest on capital, interest on drawings, salaries, commission are recorded in the current account. In the capital account, only capital amount alone is recorded. Capital amount means initial capital. If the partner is invested any additional capital, it is also recorded in the capital account. Normal drawings are entered in the current account, but permanent withdrawals of capital are recorded in the capital account. So, they try to maintain their capital permanently. They are not permitted any alteration in the capital is called as fixed capital. Remaining adjustments are entered in the current account. Now, I want to explain one problem from fixed capital method. Try to study now fixed capital method. How do you solve the problem? Question number 1. Today I want to explain only two questions. One question from fixed capital method and another question from fluctuating capital method. I want to write the question in the blackboard. Then question number 1. A and B are equal partners. Then their capital are fixed. Their capitals are fixed. If the capitals are fixed, they have to maintain two accounts. Once again, I explained the fixed capital method. In the fixed capital method, the partners have to maintain two accounts. Number 1, capital account. Number 2, current account. Only the capital amount is recorded in the capital account. All the remaining expenditure as well as incomes are recorded in the current account. Then, question: A and B are partners. Their capital on 1/1/2018, A's capital rupees 1 lakh, B's capital rupees 80,000. Then current account on 1/1/2018, current account shows the balance of rupees 5,000 and 3,000. Current account shows the credit balance. Some capital account always shows credit balance, but current account sometimes shows the debit balance also. But in this question, current account shows the credit balance 5,000 and 3,000. Additional capital of A is equal to 10,000, B is equal to 20,000. Then drawings, A is equal to 20,000, B is equal to 13,000. Then interest on drawing, A is equal to 500, B is equal to 300. Then share of profit, 10,000 and 8,000. 10,000 and 8,000. Interest on capital, 6,300 and 5,400. Then salaries, 9,000 rupees for A. B has no salaries. Then one more information, commission. A has no commission. B's commission is 1,200. These are all the information given in the question. Once again, I simply read the question once again. A and B are equal partners. Their capital are fixed. They maintain the capital accounts under fixed capital. 1/1/2018, A's capital 1,80,000. B. Current account shows the credit balance on 1/1/2018, 5,000 and 3,000. Additional capital 10,000 and 20,000. Drawings 20,000, 13,000. Interest on drawing 500, 300. Share of profit 10,000, 8,000. Interest on capital 6,300 for A, 5,400 for B. Salaries 9,000 for A, B has no salaries. Commission, A has no commission, B's commission is 1,200. Do this problem under fixed capital method. Fixed capital method. When we follow the fixed capital method, we have to maintain two accounts. Number one, capital account. Number two, current account. So we need two accounts. This side is debit side, this side is a credit side. Current account also, this side is a debit side, this side is a credit side. Then there are two partners, A and B. So we draw two columns. This is a column for A, this column for B. A, B. A's column, B's column. Likewise, here also A, B column. A, B. Here also A, B. Then in the capital account normally all the information comes in the credit side. By balance brought down. $1,80,000. 1 lakh for A, 80,000 for B. Then in the current account shows a credit balance. So it is also entered in the current account. By balance brought down, A amount 5,000, B's current account balance is 3,000. First write the opening balance here. By balance brought down 1,80,000 for B. Current account shows a credit balance. This credit balance, in A's current account balance 5,000, B's current account balance is 3,000. Both the current account shows credit balance. Then additional capital. The additional capital comes in the capital account by cash or by bank. In bracket we can write this as an additional capital. By bank account, how much amount? 10,000. 10,000. In B's column, 20,000. Then only these two information comes in the capital account. So we can close the capital account now itself. Here the total, first we draw a single line here. Here also we write a single line. 1,10,000 here. After that draw two lines. Here 80,000 plus 20,000 is equal to 1 lakh. 1 lakh. Here also we draw two lines. The same total is entered here also, 1,10,000. After that draw two lines, 1 lakh. 2 lines. Here there is no information in the debit side, so we simply balance it. To balance carry down 1,10,000 and 1 lakh. By balance brought down 1,10,000 and 1 lakh. Thus capital account is completed. Then we write the current account. In the current account, remaining all the informations are entered one by one. Capital account, first we write the capital amount. Then additional capital also comes in the capital account. Current account, first we write the balance, opening balance 5,000 and 3,000 is entered. Then write the remaining items entered one by one. Here, before studying the current account or capital account, the drawing is always comes in the debit side. Drawings. And interest on drawing also comes in the debit side. Interest on drawings. All the amounts are given in the question itself. Drawings of A is 20,000. Drawings of B is equal to 13,000. In the debit side, drawing and interest on drawings are normally comes. If any loss comes, it comes in the debit side. Otherwise, remaining all the information are in the credit side. Profit comes in the credit side, loss comes in the debit side. Drawing and interest on drawing is entered in the debit side. Interest on drawing 500 and 300. Then remaining item comes to the credit side. Share of profit by profit and loss appropriation account. Appropriation account. Profit and loss appropriation account. Share of profit 10,000 and 8,000. If the partners earn profit, in the credit side, profit and we use the word profit and loss appropriation account. If it is a loss, it comes in the debit side to profit and loss appropriation account. Now the partners earned a profit, so instead of writing share of profit, we use the word profit and loss appropriation account 10,000 and 8,000. Then by interest on capital. Interest on capital of A is equal to 6,300, B 5,400. Then salaries, by salaries, only A is entitled to get a salary. So 9,000 rupees. Then by commission, only B is entitled to get a commission of rupees 1,200. Then we draw a, so all the informations are entered. Capital, current account, then additional capital. Then drawings is entered here, interest on drawing is here. Share of profit is entered here, interest on capital is entered here, salaries only A is entitled to get a salary, so 9,000 rupees entered in the A's column. Commission, B is entitled to get the commission, so the amount is entered in the B's column alone. Then, how do you close the account? First, we draw a single line in both sides. Then write the highest amount in both sides. Here, the highest amount is here. So, after we draw double line. Highest amount is entered in both sides. 30,300. Same 30,300 is entered here also. 30,300. Here the total of B's column is equal to 17,600. Same 17,600 is entered here also. Then we subtracted from 30,300 minus 20,500. 30,300 minus 20,500 is equal to 9,800. This 9,800 is entered here. Here we write to balance carried out. The same amount is entered here also by balance brought down 9,800. Then the total of B's column is 17,600. 17,600 minus 13,300 is equal to 4,300. To balance carried down 4,300 by balance brought down in the B's column 4,300 is entered. Thus, the first method, that is fixed capital method problem, is completed. Once again I explain: capital account, current account, additional capital, drawing, interest on drawing, share of profit, interest on capital, salaries, commission. These are all the information given to the question. If the capital is fixed in the capital account, only the initial capital and additional capital are is entered. By balance brought down, initial capital 1 lakh, additional capital rupees 10,000 in the A's column. In the B's column, original capital is 80,000, additional capital 20,000. So 80,000, 20,000, we simply total it and balance is entered. Then the current account, all other information except capital, all the information except capital are recorded in the current account. In the current account, by balance brought down 5,000 and 3,000. Share of profit is given 10,000 and 8,000. By profit and loss appropriation account 10,000, 8,000 is entered. Interest on capital 6,300, 5,400. Salary is 9,000. Only A is entitled to get the salary. Commission 1,200. Only B is entitled to get the commission. Then drawings and interest on drawing comes in the debit side. Drawing and interest on drawing is entered. Then we close the account. This is the procedure for doing the fixed capital method. Then we do another one problem. Question number 2. When the capital is fluctuating, what is the procedure to solve the question when the capital is fluctuating? We try to complete one more problem. Question number 2. A and B are equal partners. Equal partners means they share profit and losses equally. That means 50% goes to A, 50% goes to B. That means 1:1. Then, when their capital, partners' capital, their capital is fluctuating. Here the question: A's column, B's column. capital. 2018, A's capital is 2 lakh and B's capital is 1,75,000. Then drawings. A's drawing 40,000, B's drawing 35,000. Interest on drawings 1,000 and B 500. Then share of profit. A 21,000, B 16,500. Then interest on capital 12,000 for A, 10,500 for B. Salaries, only A is entitled to get a salary of 18,000. Commission, only B is entitled to get a commission of 2,500. These are the information given the question. Their capital is fluctuating. If the capital is fixed, we need two accounts, capital account and current account. If the capital is fluctuating, we need only one account, that is capital account alone. We have to open only capital account. There are two partners, A and B. So we draw two columns, A and B. This side is debit side, this side is credit side, A, B. Here also A, B. First, same procedure which is applicable in the previous problem. In the previous problem, only the capital amount alone is entered. But in this question, entire informations, entire income as well as expenditure, entire profit as well as losses are entered in the capital account. But if the capital is fixed, only capital amount is entered in the capital account. Remaining all the income and expenditure or profit or loss, everything is entered in the current account. But if the capital is fluctuating, all the informations are entered together. First we write by balance brought down. By balance brought down, A's capital is 2 lakh, B's capital is 1,75,000. Then drawings. Drawing is always comes in the debit side. Drawings. Drawing of A is 40,000. Drawing of B is 35,000. Interest on drawing also comes in the debit side. Interest on drawings. Interest on drawing is 1,000 for A and 500 for B. So normally in the capital account, drawings and interest on drawings alone come in the debit side. If any loss arises, the loss is entered here. Remaining all the information comes in the credit side. By share of profit. By share of profit is entered as profit and loss appropriation account. Profit and loss appropriation account. Share of profit 21,000 for A and 16,500 for B. Then interest on capital comes in the credit side. Interest on capital. Interest on capital 12,000 for A, 10,500 for B. Then salary, by salaries, only A is entitled to get a salary of 18,000. So in the B column we put a dash. By commission. By commission, only B is entitled to get a commission, 2,500. Then we want to close the account. What is the procedure to close the account? First we draw a single line in both sides. Then write the highest amount in both sides. Here debit side shows only 41,000. This column shows 35,500. So this side is the highest side. So we have to write the total 2 lakh plus 21,000 plus 12,000 plus 18,000 is equal to 2,51,000. After draw two lines. 2,51,000. Draw double line. Here we write 2 balance carry down. 2,51,000 minus 41,000 is equal to 2,10,000. This amount is entered here also by balance brought down 2,10,000. Then we total B's column also 1,75,000 plus 16,500 plus 10,500 plus 2,500 is equal to 2,04,500. 2,04,500 after two lines. Two balance carry down. 2,04,500 minus 35,500 is equal to 1,69,000. Same amount 1,69,000 is entered here also. So this is a procedure for completing the second problem. Capital is fluctuating. If the capital is fluctuating, we have to open only one account, that is called as capital account. In the capital account, all the information given the questions are recorded one by one. Then all the information means if there is any loan account, that amount is not at all entered. But the capital account, first we write the capital by balance brought down. Then profit earned by the partners 21,000, 16,500, interest on capital, salary, commission. Then drawings and interest on drawing is entered in the debit side. This is a procedure for doing this problem. So my dear students, there are many questions which are given in the accountancy textbook. Back side of the textbook, many questions are given. Try to solve all the questions one by one. May God bless you.